Welcome to Mollik's EDUCARE Accounting 8. When sales are made on credit, the journal entry for accounts receivable is debited and the sales account is credited. That is, the journal is accounts receivable account debit 25,000 USD and sales account credit 25,000. At times, customers are unable to pay. For such scenarios, setting up or adjustment for bad debts expenses is made. Bad debts expenses is debited for such entry and allowance for doubtful account is credited. That is, the journal entry is bad debt bad debt expense account debit 25,000 and allowance for doubtful accounts account credit 25,000. Journal entry for accounts payable. The related assets or expenses account is debited and the journal entry for a payable account is credited. That is, purchase account debit 25,000, accounts payable account credit 25,000. When payment is to accounts payable is debit and the cash account is credit. That is, the receive the accounts payable. So accounts payable account debit when we pay to the payment is made in favor of accounts payable 25,000 accounts payable debit, cash account credit 25,000. Journal for payroll. In the case of payroll expenses, the wage expenses this account are debited and the cash account is credited. Payroll expenses debited 25,000, wages expense account debited 20,000. Payroll tax, that is tax deduction, tax or withholding tax, whatever you call, the payroll tax account debit 5,000 to cash account 50,000. Journal entry for depreciation. For depreciation expenses is debited and the accumulated depreciation account is credited. Not the machinery or the other things, other assets, only accumulated depreciation account is credited. Depreciation expense account debit 25,000 to accumulated depreciation account credited 25,000. Petty cash journal entry to establish a petty cash fund. Petty cash is debited and the cash account is credited. Petty cash account debit 25,000 to cash account credit 25,000. Purchased inventory journal entry. If the inventory purchase is worth 90,000, 10,000 in cash and 80,000 in on the account. So the entry should be like that. The inventory account debit 90,000 to cash account 10,000 because cash payment made on 10,000 USD and accounts payable account 80,000 USD. Journal entry for the fixed asset. When fixed assets is added, the applicable fixed asset account is debited and accounts payable is credited. There is machinery account debit 1 lakh and to accounts payable 1 lakh. Purchased equipment for 600,000 in cash, equipment account 6 debit to cash account 600,000 and 600,000. Liability accounting. Accrued liabilities account is credited if a debt is owed but not yet billed. Accrued liability entry is to be made. In this case, the accrued expense is a debit to the expense account. Expense account debit, accrued liability account credit 600,000. Dividend declaration. When dividends are declared, the retained earnings account is debited and the dividend payable account is credited. Retained earnings account debit 50,000, accounts payable account 50,000. Once dividends are paid, this is a debit to the dividends payable account and a credit to the cash account. Debt raised from bank entry. If the company borrowed 300,000 from the bank, the journal entry would be like this: cash account debit, a bank loan payable account credit. An amount of 35,000 was paid as advance rent for 3 months. The journal entries for the above transactions are prepaid rent debit 35,000, cash account credit 35,000. Second, provided services to its customers and received 20,000 in cash. Cash account debit 20,000, service revenue 20,000 credit. Received 4,000 as an advance payment for customers. Cash account debit 4,000, unearned revenue 4,000. Miscellaneous expense paid during the month total 3,000. Miscellaneous expenses 3,000, cash account credit 3,000. On 4th February 2019, purchase material worth 50,000. So purchase account debit 50,000 to cash account 50,000. The narration should be like this, being the goods purchase worth 50,000. Sold pants worth 80,000. Cash account debit 80,000 to sales account 80,000, being the goods sold worth 80,000. Incurred expenses worth expenses account debit 5,000 and cash account credit 5,000, being the expense worth 5,000 incurred. Purchased furniture worth 7,000. Furniture account debit, it should be 70,000 and to cash account 70,000. Thank you.